How are you looking at the auto pack as a whole? Certainly, this is a pack that has outperformed in the recent past, particularly if you look at Maruti Suzuki's move yesterday, Tata Motors, all in focus. How are you rating this, and what stocks are you looking at specifically?
Morning, Alex. Good morning, everyone. I think from the auto pack after yesterday's move, which came by for the couple of names, Maruti, for example, making a fresh swing high for itself. M&M, making a fresh, I think a multi-year high for itself, breaking past about those 970, 975 mark as well. And Tata Motors, of course, a stock which is now made, a fresh life high for itself, 5-year high for itself. So I think on the back of all of this, the momentum seems to be coming back into these, pockets of stocks. But then there is one clear outperformer now, as I've mapped up the charts for the auto names, and I've looked at the top three names, Maruti, M&M, as well as Tata Motors. Now, so we can break it up into two parts. One of them is pre-COVID sell-off, where you can see the green line dominating and outperforming. The green line is the chart patterns for M&M. Maruti was the second best performer in that sense, and Maruti and Tata Motors was a big laggard. Post the 2020 sell off which we had seen. Now post the sell off, the stock patterns have changed dramatically. You see now Tata Motors being one of the top performers and being a majority of the outperformance is coming out from Tata Motors in that sense. And you're seeing Maruti as well as M&M playing a catch up as such. M&M, of course, being slightly more stronger as compared to Maruti being one of the few stocks which has dominated and outperformed quite consistently as well. So the markets have clearly defined these the sectors into stronger candidates, which is now emerging as Tata Motors, and then the follow up candidates like M&M, and now the latest breakouts which have happened for Maruti as well. So as a positional trader or as an investor, you have to try and allocate more towards the leaders of the current trend and the rally, and that clearly is Tata Motors. So maintain that stance on Tata Motors as being one of the top performers, and I believe that even going forward, the stock can give a strong bit of outperformance as compared to its other peers.
That's the view coming in from Kunal. Good morning to you. And Kunal is of the view that Tata Motors will continue to be the leader among the auto packs. So if you want to take position, Tata Motors is a counter that you should look at. Good morning, Gaurang. I hope we have you on a better line right now. And what's your take on the auto pack? Yes, we've got that report coming from Morgan Stanley, which said that the Malaysia chip production is actually back to normal, or at least reaching towards the normalcy level. So which means that the shortage that the auto companies back home were facing may be eased. Do you see that this is definitely seen as a positive, but how much of a positive impact will it have on these auto companies going ahead? And if you are an investor still waiting in the sidelines, do you think right now is the time to jump into the auto pack?
Cheryl, and I hope I'm audible right now. And apologies for the patchy line, and of course my laptop has gone into a cold storage, so let's hope I'm able to join you guys before we run out of the show. So overall, yes, we remain positive on the auto sector, and not to forget, over the last couple of years, auto as well as auto ancillary sectors have gone through a rough patch, but it seems that they have been able to overcome these various hurdles, and going forward, expect inline performance with our expectation as far as auto and auto ancillary goes. And when you look at autos, you also have to look on at ancillary, both with respect to tire manufacturing companies, OEM companies, battery manufacturing companies. And of course, things have turned around for better. The only thing that one has to look into is how does each and every company which is associated with auto or auto ancillary sector manages, cost input pressures, and how do they manage their operating efficiencies. And not to forget, I think first we started with, from BS4 right away to migration to BS6, and then in between we had a lot of other issues with the auto sector. And now we have a new, avatar in form of electric vehicles that each and every company has to get used to. And a lot of companies are working towards it, and we've seen plenty of launches and many more launches to come through. So we remain that positive on the auto ancillary sector. Only thing is, going forward, how do the margins cope up? And not to forget, tire manufacturing companies have planned a capex of somewhere close to about 5,000 crores, if I'm not mistaken. At least that is the report that I read this morning. And many companies are also, planning to launch various variants in different categories. So remain positive on auto ancillary over a long period of time fundamentally.
All right. To reiterate what your view is, which counters you're positive on the medium term front?
Yes, I'll surely do that. So, for the benefit of your viewers, I'll just repeat. So, overall, as a brokerage house, we're positive on auto and auto ancillary both. And it is very important to have a positive approach towards both because what auto ancillary does, the reflection of that falls into auto ancillary, and that is your OEM segment companies, tire manufacturing companies, battery manufacturing companies. Various hurdles seems to have been overcome, and not to forget, Alex, there are a lot of them over the last 2 to 3 years since the migration became from BS4 to BS6. Post that, there are other issues, and now you have a new avatar in terms of the electric vehicle that are getting implemented across various segments in terms of 4-wheeler, 2-wheeler, heavy commercial vehicles, 3-wheelers, etc. So we as a brokerage house remain extremely positive. The only thing that one has to look into as far as fundamental goes is the rising cost pressure, and this is something that needs to be looked upon very carefully. And at the same time, how does each and every company manage the operating efficiencies? Not to forget, Alex, I think there is huge investment from the tire companies as far as capex is concerned. There is also a new guidelines that is likely to come out in terms of the safety of the vehicles and the crash tests that are undertaken. So that will eventually, increase the cost of the end product, which you and I as a consumer might have to pay. But it is always to pay a higher price for a safe and a strong vehicle rather than something that will crumple upon crash. So we remain positive. The only thing is one has to look into the operating efficiencies to overcome the cost pressures.